Hi, I'm Dennis Brager. I'm a former IRS trial attorney and a California State Bar certified tax specialist. This is just one in a series of videos designed to give answers to the questions that my clients frequently ask. Let's talk about tax levies. A tax levy is not available for the general public to see and does not by itself affect your credit rating or prevent you from selling your property. However, if the IRS serves a tax levy on your bank, then the bank is required to send all of your money to the IRS. The bank cannot immediately send your funds to the IRS, however. Instead, the tax law provides that the bank must hold on to the funds for 21 calendar days. You can expect that the bank will notify you of its receipt of the tax levy. However, this may take a few days until after the bank receives it, and the 21-day clock continues to tick. The 21-day period is extremely important because it gives you an opportunity to negotiate with the Internal Revenue Service to release the tax levy before the bank sends your funds. While it can be difficult to get the IRS to agree to release the tax levy, an experienced tax litigation attorney can sometimes get this accomplished, but it will depend on your overall situation, including such factors as how much money is in the bank, the value of your other assets, the amount of your income and expenses, the total amount of your tax bill, and whether you have been cooperating with the IRS by responding to their inquiries. Don't expect to get rapid notification from the IRS that they have sent a tax levy. The internal operating procedures of the IRS, known as the Internal Revenue Manual, specifically instruct its employees to delay sending a copy of the tax levy to the taxpayer. A tax levy sent to the bank is what's known as a one-shot tax levy. It only attaches to the funds in your account at the minute the tax levy is received. A tax levy on wages, commissions, or other similar payments, though, is a continuing levy. That means that unless the IRS agrees to release the levy, your employer will continue to send the bulk of your paycheck to the IRS until your entire tax liability has been satisfied. If the IRS sends a tax levy to your employer, the employer is required to send your paycheck to the IRS minus a very small amount, which is exempt. There is no 21-day holding period. The tax levy is effective with your very first paycheck after the employer receives the tax levy. Since there's no 21-day holding period, if you find out that the IRS has served a tax levy on your employer, it's extremely important to engage tax counsel to begin immediate negotiations with the IRS before your next paycheck. Remember, once your funds have been forwarded to the IRS, either by the bank or your employer, you're not getting them back. If you would like to see how little of your paycheck is exempt from an IRS tax levy, take a look at IRS publication 1494. For example, if you're single and have no dependents, then the IRS will let you keep $866.67 per month. Everything else is going to the IRS. If you've been levied on or received other collection notices from the IRS, please give us a call for a confidential consultation. Thank you for listening today. If you found this video helpful, please let me know by leaving a comment. And if you would like me to update you when I post a new video or send out a newsletter, please send an email to taxhelp@bragertaxlaw.com. Thank you for watching my video and have a great day.